Thanks everyone for joining. So welcome to our webinar from Blockstart Ventures. Today we are focusing on our investment thesis, and we are mostly going to talk about investing in a very unique environment. Like when we say investing in a post-COVID environment, the world has changed for good, as we all know. We are experiencing every day, and we are going to look at some macroeconomic picture, what we believe at Blockstart Ventures, like in the future opportunities and trends emerging in this world. So let's get going. But before that, I would like to introduce Nico, who is my partner in Blockstart Ventures, and he also is our legal counsel. So he would start with some legal disclosures.
Thank you, Rahman. As usual with any presentation, we just like to stress that what we're presenting is for educational purposes only, for your information. To seek guidance for any investment, you can see on the screen a more detailed analysis of those standard disclosures, but we want to make sure that you do your own due diligence prior to investing in any asset and or security. Yeah, we have the privacy policy there, the legal disclosures in detail. And with that, Rahman, why don't you go ahead and start?
Thanks, Nico. Yeah, I think it's always good to make sure that people understand that we are not here to give investment advice. I think we are trying to do these educational webinars. A lot of people ask us questions about what we believe about our investment strategy and how we go ahead in this. As we know, that world has been changing for some time now, like in terms of the money, dollar devaluation. I think a lot of discussion happened across various forums. You must have heard about how inflation is eating into your savings, or how just this money printing from Federal Reserve affects us. So we're going to talk a little bit about that just to give a perspective. We will dive a little more into the store of value aspect of money, where we say like traditional, like gold and so on. And then recently, I'm sure everybody is hearing about Bitcoin. We will try to give a little bit of perspective around what we think is happening there. We do a little bit of comparison with Web 1.0 and 2.0 and so on, like what we call Web 3.0, which is where everything is progressing as we see each and every like economic development, or even from technology perspective, how things are moving. Finally, of course, our goal is to discuss options for investors, especially in this unique environment, and then we go from there. Let's dive deep directly into very simple concept of when we say the dollar, everything when we talk about money investments. This is a chart which shows the purchasing power of US dollar since 1913, when Federal Reserve was created. And as you can see, and I think it's very obvious and everybody understands that your money doesn't have the same purchasing power over years. But what is happening, like there are usually the big events, like whenever a big economic event happen or economic environment changes, you see there are some big moves. And I'm not going to go deep into this. It's just the focus here is to understand that every time a big crisis happen or some major policy decisions are made, you see that it accelerates or improves how dollar gives you that purchasing power. Now, what is happening right now? This is just a chart of the cash generated by Federal Reserve. So if you see this, this is again a pretty long time duration chart. We are seeing from 1975 or so. And you can see that money was always being created, and that is by design. Federal Reserve tries to keep pumping money, encourage inflation so that the economic growth can happen. But what happened here, if you see, there's a big change which happened, is the curve of this slope, and the slope of this growth of this money has changed since 2008, when all of us talk about the big meltdown which happened, and the policies changed. The money printing started at a much faster rate. And I think, which you cannot see probably on the corner of the screen, this year has changed that by a very big degree. So if this curve was steep, look at what is happening in 2020. So let's dig deeper. I'm going to zoom into this portion of 2020. What is happening in 2020 is which was already a pretty steep curve. So why it is not looking steep right now is because of what happened in last 1 year. But already since 2008, you must have heard, I think macroeconomics wise, people talking about how the new policies of US government and the Fed is the money printing, and we have seen a huge stock market boom. asset classes are growing up, like inflation is going expected to go up because of all the money printing. But this just got to the next level. And if you see these big curves right now, the money has grown in just 1 year by 65%. And that means the when I say this money, this is the available money, which is not even considering the deposits or the treasuries and so on. This is the real liquid money in the hand of people. Do you think that, like, as a average person who lost his job and who is getting these checks, when they talk about stimulus, they have not gained more money, but somebody has? So the question to ask is, when you say that the money supply of the world increased by 65% in 1 year, and that means the whole, like, we're talking about hundreds of years of money printing versus 1 year of money printing, which has increased the supply by 64%, you need to wonder who is getting this money. And that's what I think everybody should ask in this environment, and why things are different in 2020 versus the last 10 years or 12 years of policy of money printing. And this is what I think people don't realize. In, like, these things do not impact you in a day-to-day basis. This will impact you in next 10 years. And that's what I think we are going to talk about a little bit today. And this is, I think, not same as what people, like, this gets ignored in the headlines when you look at the sheer numbers here. And by the way, just yesterday, I think there's another news that we are printing another 900 billion for the next stimulus check. So this curve here will go out of this page here by end of this year, before means we even enter 2021. So I think this is what is really mind boggling and not being discussed by anybody. So, as an investor, when you look at your money, we always talk about, people traditionally like to say, how much is my saving? What is my net worth? And then you try to keep that as a store of value. What is the purchasing power of the money? That is, as we all now agree, that purchasing power is going down, and it can go down significantly fast in near future because of all this money printing. What are the traditional store of values? People tend to maintain their store of value with gold and silver, which we call it a precious metal basket. Real estate has been a great conventional asset and has helped a lot of people build their wealth. And this is, again, a very, very unique conventional asset. And the reason is, always, both gold, silver, and real estate, the whole idea was that there is limited amount of supply. Either you talk about real estate, which is like your land is limited, people are growing. So it was a very easy economic concept to understand. Same thing with gold and silver, because these were rare metals, it was difficult to mine them. And that's why people assigned value to these metals. In addition, conventional asset included speculative assets, where you said, oh, what are the things which are going to grow in future? And that's how you invested in stock. And when we say stock market, then another asset was art, like, where you said this, which gains value over time. So these are just traditional conventional assets which where people have invested in. What we are going to talk about today is what is happening in future, web3, which we call it. This is the new generation, like, new technologies emerging. And I'm sure everybody hearing about Bitcoin as a store of value. Digital assets, which are, like, as you can see, everything is getting digitized. We used to have emails, like, emails digitize the whole mail world. We have everything being done online these days. We are meeting right now. These things, these meetings and these webinars used to be actual seminars in rooms, and right now we are doing it over a video. So you can clearly see that the world is moving towards digital economies. So why should the money remain physical? And that's why I think Web3 is taking the move from physical assets to digital assets. And Bitcoin is being touted by many people, and now I think it's being accepted by many people as digital gold and the future of the precious metals. Similarly, there are a lot of other digital assets. So I'm not going to go into deep into that, but even like things like digital real estate, stock, art, all of these things are getting converted into digital assets, so that you do not have to physically retain that, and you can transact these over the internet. And that is, I think, the trend, digitized conventional assets, which we believe is going to change the way you look at money in future. And we will definitely discuss more about in this webinar. You can, if you have any questions, we can take those. But my idea was to just give you the direction. As an investor, you need to understand where we are heading. When we think about money, you have to think about where will you store your investments, and whether this is going to gain any significant value. Now,
Ramon, if just for 1 second, I'd like to intercede here. There's a lot of words that we take for granted. We talk about this for over years. We've grown accustomed to the nomenclature and the language. There's going to be a lot of terms that you might not understand. Please feel free to ask any questions. These ideas that are very commonsensical for us, digitizing art, for example, might not be an intuitive idea for people watching the seminar. And what I'd like to give an example that, for example, not many people can afford to buy a Picasso or a Warhol painting, but just in the last few years, using digital assets, the shares in a painting of a Warhol in this case were broken up and fractionalized so that individual investors can buy a part of that art piece collectively and then share in the upside potential of that work. And that actually happened recently. And the art piece itself remains in storage, and we as individual holders hold the digital tokens that represent an ownership interest in that asset. To give you an idea of what Ramon means when he talks about digitizing some of these assets.
Yeah. No, thanks, Nico. I think that's a great point. Means as like we have been involved in this technology and in this space for many years now. We sometimes we take things for granted of how technology is moving. So, if any of you have any questions about how this works and how far the progress has been made in these areas, we can definitely dig deeper. And as Nico said, like means even something like a art, like a painting, is getting digitized and people are owning shares. It's kind of intuitive because this has been happening for hundreds of years now. Like stock market is not new. When we own a company, when we own a stock, means people understood that. And this used to be paper. Like in like if you talk about 100 years ago, when stock market you were buying shares, you were getting share certificates in physical form. And then today, nobody cares about it. You just log into a brokerage and you own digitally those shares in your account. So I think that's been there for a long time. What blockchain and the Web3 is allowing people to do is to take more and more of such assets, which are in real world existing, like just like companies were digitized. I would say digitized because stock market is digital now. Nobody owns physical shares anymore. You don't go and even people don't even like you can attend the meeting, shareholder meetings from everywhere. So you don't even have any physical interaction with the company, but you own you have the ownership shares of those companies. So similarly, I think the model and the technology is available now to digitize anything and everything, and that includes your paintings, that includes your gold and silver. And we're going to talk about all of these things. And as Nico said, please feel free to stop us. I think we want to make it interactive. Our goal is not to have a presentation here. We will be taking a lot of questions. So feel free to ask anything, if how these things are moving and what are the challenges for investors to understand these things and to participate in this new direction.
Something else to keep, one more thing to keep in mind when you talk about digitizing these assets is the disintermediation that takes place. By simply creating a smart contract and allowing us as individuals to participate on a peer-to-peer basis, we're cutting out brokers, middlemen, rent seekers, all the people that would, take a little piece of your interest as you come in are being disintermediated. And that's something to keep in mind throughout the discussion, that what makes blockchain so revolutionary, because not only in cutting out those intermediaries, you're cutting out cost, you're saving time, and it really is a paradigm shift in that respect.
Yeah, I think, and that's very critical. So let's jump into a few things. Like we did a survey from Blockstart Ventures, and we have been trying to figure out what investors are doing. And we covered this in the last webinar, so I will not spend a lot of time on it. But the basic idea is that everybody invests in stocks. A lot of people invest in real estate and gold and silver, but it's very interesting to see that almost 1/3 of our respondents already are investing in cryptocurrencies. On the other hand, it's very unique that we believe, like as at our end, that why the other 2/3 of the people are not considering it. And that's when we ask the questions about what drives them. And then we dig deeper into Bitcoin. And as you can see, a lot of people are watching it. They don't understand it enough to put their money because they're scared that they don't understand this new, some people call it the funny money. And there are a lot of people like that. And that is our goal, to explain that what is happening here. This is just a normal technology revolution. This is nothing to do with somebody trying to create money out of nowhere. This is, and for that matter, means I think we started the webinar by showing you how Federal Reserve is creating money from nowhere. And we have almost doubled our money. By the time this pandemic ends, we would have doubled our money supply. I'm sure none of you would be like, unless you're speculating in stock and you just sit, if you're keeping your dollars in bank, it's not going to double of its own. While the whole money supply will be doubled in 1 year by March, when we go back and full circle of 1 year of pandemic, and we are on target for that. So this is where I think we need to understand that all the money is just an idea, and that's what Bitcoin revolutionized, and people are getting attracted now. And as you can see, the adoption is growing. And this is our survey, of course. This is a small set of people who are probably sophisticated investors who understand, and we have been talking to them. And these are people who are actively managing their investments. If you look at the actual audience outside this sophisticated investor base, the actual adoption is much lower. So this is not representing general population. I'm showing you these numbers, which is like 20% of people who are investing in Bitcoin. That is actually not true for average population. This is true for sophisticated investors whom usually we deal with, and and we are showing you that data. On the other hand, you cannot ignore whether you like it or not. Like, a lot of people don't like Bitcoin, a lot of people don't understand it. The fact is, Bitcoin has been the best performing asset in any time frame you look at, 1 year, 2 years, even last 10 years, of course, because Bitcoin was created 12 years back and it was worth nothing. So we are not even focusing on that. What we are talking about right now is, even in last 1-2 years, if you compare Bitcoin with any other asset class, it has outperformed by a huge margin. This is where I think, whether you agree whether Bitcoin is something which you want to accept or not, you cannot ignore it. And that is what we are seeing is changing very fast, because asset managers every day are coming out and declaring that they are moving more money. Like, we are seeing what happened in last 2 weeks itself, where we have seen companies like Mass Mutual, who are the oldest, like one of the oldest insurance companies, and they manage like half a trillion worth of funds probably, and they are allocating $100 million into Bitcoin. And this is a very, very small move from them, because their asset base is huge. But when these kind of companies come and start accepting the Bitcoin as an asset class, that's where you have to say that this is now no longer a speculative bet. Now it's becoming an accepted kind of diversification technique, at least, if not a speculative move from these people. On the other hand, some people worry about, oh, Bitcoin has moved so fast. Have we lost the opportunity? And moreover, when we talk about Web3, we wanted to show you the size of these markets. And especially, we are going to cover a little bit more about DeFi. So DeFi is a term which we call it decentralized financing. And decentralized finance is very, very small right now. But look at cryptocurrency as a whole. It's such a small market compared to gold. Then we look at stock market, which is huge, even much, much bigger than gold. And then we look at real estate. All of these things are yet to be digitized. Real estate is still not digitized. Just like Nico talked about art, there's a lot of efforts going on right now where each and every real estate piece will be available to buy in fractions, where you can buy it online and you will own shares in that digitally on blockchain. And then if we go to the derivatives market in economic world, then there is no limit. We are talking about quadrillion dollars of derived assets. Of course, a lot of people don't understand derivatives, so we are not going to go into that, because those are very complex economic products. But what happens is, when you start using technology to go and run your money, this derivative market is completely becomes accessible to everyday person, not only for big fund managers. And that's what we call it decentralized finance. The decentralized finance goal is, as we see the trend moving towards in a direction where they want to make this huge derivative market available to an average person, just like Bitcoin made it possible for you to own a fraction of a store of value kind of market, which was gold. Gold was not easy to buy. Remember, we keep forgetting that there's no easy way to buy gold. Even though gold has been hundreds of years old and it is considered the biggest asset, to own physical gold, it was still very, very difficult. You were not able to even use it as a currency or as a value. Even to buy and sell gold was not easy. And that's when a lot of fintech instruments were brought in. Like nowadays, a lot of people invest in ETFs and a lot of digital way of investing in gold. So this trend has been going on, but what is accelerating this trend is this whole Web3 technologies, which we believe is changing how these things can be accelerated, how these derivatives can be made available to average person. And without jumping into the details, I know this looks like an eye chart. Means we have been reading all the surveys of big industrial houses like Deloitte, like IDCs of the world and Global Grandview Research. Everybody is projecting that uh, even in the like enterprise, when you say technology, energy resources, manufacturing, life sciences, and healthcare, in every field, in every year when we look at the research, like 2019 we were looking at these reports and we are looking at 2020, we see the growth, we see this huge growth in acceptance of blockchain. Similarly, they when just within us, then when they talk about the market size of the this kind of cloud services, and we compare it with blockchain, it is huge. Like there is a prediction that by 2025 the blockchain technology market size will outpace the private and public cloud. Similarly, when they look at actually companies investing in blockchain, there are 86% of the companies in United States today in the survey said they are actually putting money into blockchain technology. So it's something you cannot ignore as purely based on technology. So now we are moving from the discussion around money and store of value to what we believe is the trend in terms of you cannot miss out as an investor on this huge trend of money flowing into Web 3.0, which is what we call which includes blockchain technologies, artificial intelligence, and many, many new revolutionary like kind of investment opportunities. Now I would without, again, as I said, our goal is not to, we can always, like, we can engage with individual investors, we do a lot of individual calls, you can always reach out to us and we can share more details about these. But just one more data point before I leave it to for questions is what is the IDC saying, which is the the one of the biggest technology research company, and they are saying that in next year or so, this was their actual spendings they have got. Look at the growth in last 5 years of what the companies are planning to spend, and this is growing at a very, very fast pace. And in terms of sectors, we are looking at many, many sectors. Like financial sector, of course, is the biggest, we just talked about it, but there are distribution and services, manufacturing, and even the public sector. The government spending on blockchain is at the highest level. This is, I think, the most of the governments, including US government, are spending perhaps billions and billions of dollars every year right now in blockchain. And we can definitely discuss these things individually with you. In this webinar, we just wanted to give you a perspective of where we are in terms of this Web3 technologies, what are the opportunities out there. And I would also like now, I think Nico would like to talk about a little bit about how this evolution has been happening before we open this for further questions.
Thanks, Ramon. It's Ramon's been mentioning, Web 1, Web 2, Web 3. This is just a historical perspective about the evolution of blockchain. I'm sorry, of the internet in general. So Web 1, very simple, not interactive. Web 2, you've got Facebook, you've got sharing, you've got data. And then Web 3 introduces, blockchain, artificial intelligence, and really is, being touted by many as the most impactful after the internet itself. So I thought it would be interesting to kind of compare some of the perspectives from the early internet that now we take for granted. We can't imagine living without the internet. But here in 1998, imagine, not so long ago, Paul Krugman, who was a Nobel laureate for economics of all things, said that by 2005 or so, it will become clear that the internet's impact on the economy will be no greater than the fax machine. It's incredible. Wired magazine, these are computer people. They said that most things that succeed don't require the training of 250 million people. And these are people in technology. And that was in 1995 in Wired magazine. And then also in 1995, you had Newsweek magazine saying that no digital or online database will ever replace your newspaper. Some years later, they announced that their print version would no longer be available in print, but would only be available online. So you can see this a massive shift. What's interesting to note also is that just a few short years after these quotes, the industry, the internet industry, we call Web 1.0, represented $4.5 trillion of investment just domestically in the United States. This is interesting by comparison because blockchain is global. This is a global industry. And the markets that Rahman was referring to previously represent multiple $1 trillion of each market in those respective industries. The thing to remember, I think, and it's a little more detailed of a discussion to get to that point where it's very clear. You'll get a sense of it here, but we see blockchain as the single greatest wealth transfer in history, because how we own businesses is changing, how we interact with data is changing. It's being reinterpreted on so many levels. So that's very important to remember. Also important to remember is that anytime there's a paradigm shift in anything, for example, they laughed at Picasso's work when he first introduced it. Anytime there's a shift that is significant, normally it'd be accompanied by fear of change. So it's important to understand that, of course, there will be skeptics, of course, there will be doubters, but it really helps to take the time, just as it would be in any of the industries, whether art or industry, any time that there's a paradigm shifting introduction, to take the time to analyze it and understand for yourself what the opportunities there might be. So with that, Rahman, if you want to open up to questions.
Sure. No, Nico, I think that's a great point you made. And basic idea is that there is always double views, right? Means there is always skepticism built around it. There is another reason for it. Like what I have seen is there are people who are getting disrupted here. The banks are getting disrupted. Every industry, as we showed, like 86% of corporates are investing into blockchain. They are getting disrupted. And what does that mean? They're going to try to protect themselves, and they're going to try to create a negative feeling around new technologies. That's what happened when artificial intelligence came in. That's what happened when even today you see Facebook and Google are growing, and there are a lot of people who try to negate that. They say, oh, these people are doing wrong towards the society, but these companies get stronger and stronger because they have the technology behind them. They're using AI, they're using this advanced algorithms and technology to take profits from us, and we cannot stop it. And similarly, the trends, once they change for good. And that's what we have seen. And I will stop sharing now. By the way, before we go, we have a blockstartventures.com. Our site has just gone up, and we have the webinars like these we do through events. Like, you can go to the events page if to find more. By the way, like our goal was to have this as an open Q&A session. So we will now stop presenting and get into the Q&A mode. And I have seen a couple of questions on our chat. So let me start with those. So I think Michael has asked, how do you guys foresee the property market integrating with crypto? This involves bank, title companies, and mortgage brokers. That's a very good question. So I would say that, and I think there's a very good comment from Reva that that we will be able to purchase real estate with cryptocurrencies. In fact, there are a couple of examples I've heard that which has already happened. Being able to spend crypto in these kind of transaction is a no-brainer. I think everybody is integrating. And by the way, if you guys must have noticed the news about PayPal, right? Means right now, PayPal, which is the most common way of paying over internet, has already integrated crypto now. You can buy crypto and pay with Bitcoin to any retailer. So this is not just real estate. I think every transaction in the world will be possible through crypto. But going back to the original question, how do we see the property market integrating with crypto? As we talked about, there are a lot of properties are being digitized. What that means is when you build like when you do commercial real estate, I don't know how many of you invest into commercial real estate, but these are like syndicate deals. These are like actual LLCs which are formed, and there are partnership interest from each of the investor. And this was very illiquid market, where once you get into a deal, you can only exit after a certain number of years, and the managers can only allow you to exit. Think about the scenario where these things will become like stock market, where it is on blockchain, you are able to purchase a property share and to transfer to anybody peer to peer. Those are the kind of things I think which are already being developed. Means we are talking to many companies who are doing this. In fact, we have examples where there have been some big holiday resorts which have been sold on blockchain. There are actual activity happening where people have digitized a big real estate market or a property and sold it on blockchain, where you own the share directly and not through a paperwork of a LLC and so on. And that this is actually the innovation happening. On the other hand, when you say like how the banks and title companies are going to change it, this is unfortunately a very regulated environment. And I would say things are happening individually, and there are a lot of interesting projects where they're trying to put the property titles on blockchain, which are easier to prove and easier to verify. But that needs a much bigger change of acceptance and regulatory changes in each of the state. And this, as you know, that properties market is very, very local. Every state, every county has their own rules. So I think that's a major block against adoption. In terms of technology, I think as we all agree, the trend is in the direction where this will be accepted. So we do believe that the trend is still going to move in the direction of digitization. In terms of banks, I do know of multiple projects where people are able to collateralize their digital currencies and take loans for paying for real estate. For example, you can collateralize Bitcoin. You can collateralize even actual real estate properties on blockchain. So those kind of things are happening. They are moving very, very fast. So that's, I think, where we are going to see the move, where people will be able to see these things easily accessible, like which were not easy for earlier for you to access those deals. They will be available because they're digital.
It's interesting to note, Ramon, also, you mentioned PayPal. PayPal has 350 million users, monthly active users. So the impact of just one company, not to mention Square and so many other massive companies, impacting cryptocurrency. And as Ramon showed, how small the market is and what the impact must be. Any one of these companies, for example, in Bitcoin, there's only, as we know, there are only 21 million Bitcoins. Each one of the companies alone buys more Bitcoin that is being produced and mined on a daily basis. Collectively, it's a bottleneck. There's simply not enough supply. And we talk about scarcity. It's interesting that gold is scarce. That's what gives it value. But there are asteroids with quadrillions of dollars worth of gold that are, could potentially be mined. What will that do to the value of gold if such reserves are accessed? Similarly, or actually contrarily, Bitcoin and these are provably, verifiably scarce. We know exactly how much Bitcoin there is. Every 10 minutes, Bitcoin self-audits since 2009, as do many other cryptocurrencies, which makes us know that no matter what happens, that we're not going to discover Bitcoin on an asteroid. So it's an important point, I think, to understand and appreciate the tremendous impact that scarcity of digital assets represents.
Sure. And we have a question here on the chat again about the Bitcoin that Nico, you mentioned. So it's talks about Bitcoin now reaching all-time highs, and whether we believe that for people, but what is our message to people who believe they have missed out? So let me say this way, like, of course, timing the market is never fun, when especially with the kind of asset class we're talking about Bitcoin. But it's a matter of, as I think Nico raised a very, very good point, it's about provably scarce. Like Bitcoin is not like gold. You cannot find new mines. You cannot go and dig more, or dig, like even this hypothetical case of asteroids mining, which actually is not hypothetical anymore, with people like Elon Musk who are actually putting a mission on that right now to send their SpaceX rockets to go land on asteroids and mine gold. Means people used to think this is all science fiction. These are the kind of things which are happening. This is where the technology is heading. Now, coming back to Bitcoin, the good news is it is programmed to be scarce. It is I don't know if you many people understand the halvening, which they call it. Basically, the new supply getting created has a fixed schedule of how it will keep reducing. And moreover, there's a max supply, which is already set in the code. And that's the benefit of programmed money. Again, it looks very difficult. And I think it took me some time, and like means when I heard about Bitcoin, to understand how can you program money? How can you just put it in a bits and pieces or like in a computer? But that's what is the fun of it, right? Means when I realized that even Federal Reserve just click a couple of buttons on computer nowadays to create this 600 like, trillions of dollars of money is printed. The interesting part is they don't really print it. When we say money printing, there is no printing happening there. Nothing happens. It takes 10 seconds for Federal Reserve to create $1 trillion. And that all means a single press of the button on their computer. That's how money is printed these days. So you need to understand that difference. Like people believe that in the authority of these like Federal Reserve government, they are clueless in the face of pandemic right now. And what they're doing is there was a tightening happening last year. That's what we started this webinar with. The whole discussion in January before pandemic was how do we reduce the supply of money? How do we tighten the economy? Because stock market was at all time high, and we had just went through 12 years of loosening, like and creating more money. But as soon as pandemic hit, there was no other solution for the government. They did not want to do it. If you go and read their statements before pandemic, nobody wanted to print more money, but they were forced to do it. Now, this is the kind of difference where Bitcoin will never have that situation. It's fixed programmed money. And now there is a real responsible economics can be built around it. That's what people love about this new money. That's what people think that this cannot be done by policy changes. And this can really create real store of value so that you don't lose value because the policymakers cannot find out. Because of mismanagement of economy, you just print more money, give it, and that inequality starts creeping up. And that's why I started this by showing you how the money supply has grown, and it's going to get doubled in 1 year during this pandemic. If you are saving sitting in the bank account or only earning 0.1 interest, 0.1% interest, that's what banks give you these days. If you're lucky, some of them, I think in Europe and some other places, they're charging you to hold money in the bank because the rates are negative there. So the thing is, you are losing money by not participating in the basic store of value investment. And that's what, if you see, gold actually is trying to keep up. Gold is a conventional store of value. A lot of people made a good decision of keeping gold instead of cash. And gold has been doing reasonably well. It's not doubling like what the dollar stores doubled, but gold has still managed to capture some part of the value. On the other hand, Bitcoin has been capturing this value much better. So when you say all-time high, Jason, I think this is a good question, but all-time high with respect to what? Because actually this is not Bitcoin going up, this is dollar losing value. And as we have seen in the trends, dollar will keep losing value. So Bitcoin has a long way to go because it cannot be generated. And I think again, it is speculative to go a price targets or say how far it can go. And we don't believe in that. We believe it's just a store of value and it will keep growing. On the other hand, people like Citibank, JP Morgan, Fidelity, all of these big brokerage houses, even Guggenheimer, I think these are the investment funds we are talking about who manage your money, where all of us are putting our money in stock market, in mutual funds, in ETFs. We invest with them and they invest your money. They are giving us targets of $300,000, $400,000. And this is in news every day these days. You can just turn on CNBC and you will hear all about their targets. And they have their own theories. See, nobody can see the future, but they have their own theories. And everybody is coming to conclusion that Bitcoin has a long way to go. On the other hand, as I say, we don't believe in speculation. We believe in how can you allocate your assets. So it's highly unresponsible right now to not put money into Bitcoin. But should you just go all in? No, we have a lot of other things. Which, as we say, nobody ever told you to put all your money in gold because you will end up timing it wrongly. You can enter at a very wrong time and you can be sitting on a huge losses. So this is why whenever we do our asset allocation, we talk about what are other opportunities. While Bitcoin may not grow, like if you go from 2017 to 2020, Bitcoin has just maybe it went all the way down to 3,000 from 20,000 and came back up. On the other hand, during the same period, the Web3 technology, many projects have grown 100 times or 300 times. Those are the projects which we were also allocating our assets to. and we were monitoring them. So this is a technology move. This is not about Bitcoin only. This is about the where all you can look at. Bitcoin is just an example of store of value, and we can all discuss about. I think we can do more webinars in future, and we can talk about like decentralized finance and the new technologies which are coming. That's what we suggest, and we do ourselves when we are doing within the venture fund. We are allocating money to different opportunities in this domain rather than just relying on Bitcoin to go up. But again, it was a
Well,
long answer to this question, but I would say that whether Bitcoin is at all time high is a bad timing. Nobody knows, but it doesn't, like, we believe that it has a long way to go, and there are reasons for it. There are solid reasons for it. On the other hand, we believe that nobody should go all in into an asset which is very volatile.
the most, just carrying on from some of that, in finance, really the discussion about Bitcoin, what it is closed. The case is closed. There are no other great investors who need to endorse it. All the biggest names, from Forbes to Druckenmiller to Bill Miller, I mean, all the top financial people have all endorsed it. And at this point, what used to be considered a risk as an investment, it's now considered a risk not to invest in Bitcoin. But like Rahman said, we're not just looking at Bitcoin. We think of it very much as in the actual gold rush in the 1800s in California, the ones who made the most money were not actually mining gold. That was Sam Brannan, who was selling picks and shovels during the gold rush, and Levi Strauss, who was making Levi's. Those are the ones who actually made the most money. And I think we approach it in a very similar way, building and exploring projects, not just digital assets, and waiting for them to go up and down, which we know is a very volatile proposition.
No, and Nico, I think that's a very good point you raised. Picks and shovel play, as we call it. And this is very popular in stock market. A lot of fund managers have built huge fortunes by doing that in stock market. So anything, whenever things change, it's a matter of finding the trend and looking at what you cannot live without. So whether Bitcoin goes up or down, what is for sure happening is that Bitcoin is now a new asset class. You cannot ignore that fact. So rather than investing only in Bitcoin, we also look at opportunities, as Nico said, as we call it, picks and shovel play, and giving the reference to the gold rush of California. And what are those picks and shovel? We can talk about Bitcoin is not just like as an asset, but there's technology. Bitcoin brought in a blockchain technology to the mainstream, and we can go deeper into it. But basically, we call it smart contracts. We call it these platforms which are built around it. There are a lot of services in software world which can improve by this blockchain technology. And when we were showing you all the industry surveys, like where people are investing, and when we are saying that in future, the market size, when we say market size of blockchain will grow to trillions of dollars, the idea there was that most of these things are probably going to go slowly into each of these use cases. We talked about real estate already, but think about your software itself, right? What is running your, like operations in an industry, the enterprise. We are very, very closely working with an enterprise. And I think this is beyond the scope of this webinar, but as Blockstart Ventures, we are not just investing, means we have multiple companies and products built and incubated by our teams. And we are taking a more hands-on approach. We are not going with the pure investment and speculation. We are actually building these products. We are working closely with enterprise. And we are looking for how we can bring those opportunities to investors as well as developers. And if you see, this is how the world will look like in near future. It's not going to be that you can just go and speculate on something, because by the time an average investor learns about these technologies, it's already mainstream. And just like we had this question that whether I missed out on Bitcoin, you will feel the same way about these Web3 technologies 5 years from now, when these things become a news headline on CNBC. Right now, they are too, like, of course, they are late in Bitcoin because there was much better opportunity in 2015. There was still a good opportunity even last year when Bitcoin went to 3,000. You can always say you missed out, but because you already missed 10x gains. But on the other hand, it can go as the price targets are another 10x. So you still have a lot to gain. There's always a risk when you come in early. Like as we are talking about this Web3 technology and the new products, and because I personally have spent a lot of time in startup world in last 10 years advising and investing in those, there's always risk. Not every project is successful. That's why I think we believe in diversification. Like, as when we do, why did we do a venture fund? Because when we work with investors, they come and say, I cannot pick the winner, which is 100x. How do we do that? And that's why venture funds and this whole private equity industry exists, by professionally reviewing and the opportunities and diversifying. And single investor either doesn't have time or the assets to invest into hundreds of projects. And that's what I think we are trying to build. And we are looking for what are the other opportunities? How do you gain from this trend? By using enterprise class blockchain software, by developing them ourselves so that we are learning. We are not just relying on the news reports and a big research house is learning about it, because they usually pick up things late. By the time they publish these reports, a lot of people would have missed out. And that's true for Bitcoin. Like, I won't say that you did not miss out if you are still feeling like that, but it's a matter of when do you come in. Of course, you will feel great today if you had bought Bitcoin at $100 or even $3,000, but maybe you will not feel that way when it hits 200,000 or 300,000, as this Citibank and JP Morgan are telling us.
On the other hand, Ramon, if we had this webinar yesterday and someone had asked this question and they invested in Bitcoin yesterday, they would have made 20% on their money, 10 to 20%. And this is, I've been around in this industry since 2013, and I had people telling me when it was $150 how much they missed out, and I heard it every step along the way. Even now, it's the same thing. And again, we could say, is it a risk? Well, at this moment, Bitcoin is risk-free theoretically, right? Because anyone who's invested in Bitcoin has made money, and because every prior price was lower than today. And we can't obviously guarantee that is going to be a future, but it's getting to be an old story from this side.
I think, Nico, that's a great point. And as I said, right, means the risk reward in any investment, I think you can always say very simply, I always say this one thing: the reward is always proportional to risk. People who came in when Bitcoin was $100, Bitcoin was much more risky. Today, when it is 20,000, it is risk-free, because now JP Morgan, Citibank, and Fidelity, Forbes, anybody you ask, everybody is accepting Bitcoin. So of course the risk is low. So the returns will be in that proportion. But will they still beat the market? Yes, because it's still a programmable, scarce resource. It is still the better store of value than gold. So people know about gold, right? Would you say you were late in gold in early 2000, like 2000, year 2000, 2001, and since then gold has still gone 10 times. So what I'm saying is, last, we had a huge gold bull run, and multiple times in the history, and gold was considered store of value. At any point you could have said that you were late to gold. But even today, people are giving new targets to gold now. Even after gold has reached like $2,000 per ounce, people are talking about 20,000 now. Every asset class goes through cycles, and at every local top, you can say you missed out. But then, if the fundamentals are solid, which we believe gold's fundamentals are solid, a lot of people are talking about, oh, Bitcoin will go and kill gold. That's not going to happen. Gold will be around, but Bitcoin is a better gold because it has the properties which these big industrial houses and big investment houses like Fidelity, like I just listen to these people and I wonder, this is the same thing we were saying 5 years ago. Like, we who are early into Bitcoin, we were all, or even blockchain, like 2 or 3 years ago when market peaked and started going down, we were saying the same things all across, because we are involved in the technology, we are building it, and we understand it. Usually the big research reports come out when it is mainstream. So Bitcoin is not risky right now, but the risk reward has changed. 3 years, 5 years, 6 years ago, the risk reward was like, risk was very high and reward was also high, and you were getting that same risk, reward. Now it is still a great investment. On the other hand, it is less risky. So you will accept the returns which are in that proportion. It will double from here, maybe 5 times from here, 10 times from here. It can go anywhere because of the scarcity. But yes, if you think that, oh, if you compare with people who came in at $100 or less, means of course that is feels bad, because the reality is that it was much riskier back then, and today it's a no-brainer. But again, let me focus on where we spend a lot of time on. So Bitcoin is just like store of value. Like today, nobody thinks about gold, right? It means when you're researching investments, you just allocate certain portion to gold, and then you look at which stock to invest in. You look at what new technology and new trends you invest in. So we are in that stage where Bitcoin is just an allocation now. Bitcoin will become a 5% of or 10% of your investment allocation. But you still need to look at, are you missing out on the next big opportunity? Bitcoin will grow slowly or fast. We don't know. We know that it is a great store of value. It will definitely outperform dollar. You cannot keep money in dollar. On the other hand, are you missing out on much bigger trend here? What Bitcoin started, just like what internet started, internet gave birth to Amazon, Facebook, and all these modern world kind of $1 trillion companies we are talking about here. All of these were great investment when internet started, if you could pick those. Today, we are talking about a new internet. Blockchain is giving birth to a new internet, which is decentralized, which is going across, peer-to-peer based economy rather than a direct centralized economies. You need to pick those trends and spread your bets there. And that is what I think, if you understand what is happening as a trend, you can go and learn and make all the difference. So that's what our job is. I think that's what we have been doing. And the reason we believe that we know this industry better than most of the other people who just speculate on Bitcoin is because we are building it. We believe that this is not the this is not a place where you can just say and passively invest. You have to be very, very active. You need to understand on a daily basis, try out things. And that's what I think in Blockstart Ventures, our model is we roll our sleeves, we actually participate in projects, we are working very closely with new technologies, which where we are with developers to go who are building these next set of tools. And I think that's the model we are going to go with. So again, I think I would say that if you have any other questions, we have more time to take those. And again, it's a matter of trying to feel free to ask any question. It's not a matter of whether you don't understand certain things we talk, because as Nico said at the start, we know a lot of things. Some of these terms we use on a daily basis. They are very common for us. So if you have any basic questions, we want to answer those so that you understand where we come from.
We're also available, through our website or through our personal emails, which most of you have, with other questions. So it's another thing too.
All right. So I think if okay, I have one question. There's a question about government regulations, antitrust actions, and so on. I think, yeah, that's a very good question. I think because Bitcoin is a new technology, which is sometimes looks like, or like this whole blockchain sometimes undermine the regulations. Let me give you one example to help you understand better. It's a very recent example. Like when Uber came into existence, many cities and regulations opposed it. They said, "These how can anybody without getting a license run a taxi service?" And what happened with that is many cities banned Uber. On the other hand, because people accepted Uber, they went on to use it, and wherever there was no ban, it became so popular that the cities which had originally banned it, they just tried to bend regulations to accommodate Uber. And that's what is a great example of how, when a technology disrupts the status quo, regulations have to follow. They cannot dictate and stop technologies from moving forward. And not just Uber, I think what we have seen is Airbnb is an example. Nobody liked it. Like the hotels, the whole hotel industry was really upset. They lobbied against Airbnb. A lot of bans were put into place. So all this is usual. I think the regulations are a matter of government policies which do not like change because they are supported by lobbyists who are funding, who are the existing uh, you know uh, dominant player in that market. They have a lot of money because they have built those industries based on old principles, and they would do their best. And this is common. I think banks tried to stop Bitcoin by talking negative about it, trying to create regulations around it. they were not successful. So I think there's a long history. You can take any industry, any examples. When technology moves forward, there is always hiccups. We believe that same thing Facebook faced. I think that's a good question you asked about Facebook. And what I understand is next month they are still launching this Libra project, which is blockchain-based payments. They adjust. So I think these people are smart. Like the technology is moving. There's always an option to adjust according to regulations. But if everyday user is accepting this technology, which we are seeing that it is growing very, very actively, you will see that regulations will bend. That's how regulators' job is not to, ideally, not to stop innovation. And I would say Nico has more comments about it, I'm sure, because he watches very carefully. Because that's, I think, being a lawyer and general counsel for the fund, he watches the regulations very, very closely. But my view as a means I focus on innovation part of it. My answer to that would be that regulators cannot always stop the technological innovation, and it's a matter of the incumbents trying to go and lobby against the new technology, which has never worked. And I gave you a few examples like Uber, Airbnb, even Bitcoin was considered as a disrupting technology, which people tried to oppose. And I strongly believe that regulations automatically adjust over time.
It's interesting, Ramon. This kind of reminds me why we thought to have this webinar in the beginning, and why it's entitled, investments in a post-COVID world. Ramon brings up this idea of Airbnb and even Bitcoin itself. The light bulb, which all of us are enjoying at the moment, the common denominator of all these things is they've been introduced during times of great crisis. Airbnb, as much as it is an innovation in technology, it's an innovation in reaction to economic circumstances. Many people couldn't afford to take a hotel in the city in 2008 and 9 when Airbnb was founded. So this idea of crowdsourcing and using what we have and repurposing and reimagining gives birth to these great innovations. The light bulb was created during the Great Depression, and other amazing innovations came out. Bitcoin was a direct reaction to the Great Recession. So, keeping that in mind, what will COVID and this great crisis that we're experiencing now, what will come out of it? And I think that blockchain technology, along with AI and other aspects of Web3, are positioned to answer that question.
Yeah, I think I hope we understood the question correctly. So let us know if you think that answered your question, because the regulatory domain is pretty much very, very difficult, right? And that's why I think we have the way we have structured this fund. I think Nico, with his experience in the legal side, as well as monitoring this regulatory environment, he's a great asset to monitor those things, and we completely understand these kind of concerns which have always been there. And I think that's what we in like as I said, Blockstart Ventures, we are also closely associated with our own incubator and many other incubators in this blockchain space. We help them understand how to go and navigate this regulatory landscape. And definitely for our portfolio companies within Blockstart Ventures, we do intend to provide those services, and that's exactly, I think, the value add we can bring as a fund. So there are a lot of things which I think we are doing in this area, and it was actually a very good question, because this is one of the biggest concerns these days people have about blockchain. But also, as I highlighted at the start of the seminar, like we were talking about all these surveys, and we are talking to so many industries. The fact is, nobody is worried about regulations in the industry. This is kind of more like a mass media and an average person concern, because of the news about the negative news flow which was created around cryptocurrencies. And cryptocurrencies, because this is a new form of currencies which are not issued by governments, it was definitely a concern, because it related to money laundering, related to illegal activity happening. But that is true for any money. Like, I'm sure, means a lot of people understand that there's a huge cash economy in most of the countries, including US, where people use cash for illegal activities. So this was bound to happen. and there are a lot of news around it, and it was just a matter of people focusing on the wrong aspects. But when we talk to industry players, when we talk to like like even blockchain perspective, even Facebook, if you see, they are pretty big on this. Like, even though they have regulatory pressure, they have built a consortium. They're launching this Libra coin next month. All these things are moving forward. And especially, I think now that everybody's on board, like I've never heard any regulator say that blockchain is a problem. The only thing is they are still learning how to fit into the regulatory framework. And this is very similar. This is why I keep going back to Uber and Airbnb. They had no idea how to regulate them. Uber and Airbnb are perfect example of how regulators learn later on, and they are slow because that's how they're designed. They're designed to keep the status quo, because that's how you regulate. You cannot just allow changes to happen too fast. And I think that's what is happening right now. Regulators will adjust, and they will come around once they realize the potential of these technologies.
I think too, Ami, it's a great question, and I didn't really address it before. I was sidetracked this idea of Airbnb, but it would be the subject of an entire webinar, regulation. But the fact is that, well, I mean, regulations are intended to protect investors primarily. When technology grows as quickly as blockchain, it creates a predicament for regulators. How do you, now $500 billion is invested in Bitcoin. A regulation could actually hurt the investors, not to mention the fact that, other, great economies, China, Japan, Korea, all these countries, Switzerland, Europe, are advancing so quickly. We didn't address central bank digital currencies, that looks to be almost universal. Upcoming idea. So stifling the innovation with excess regulation, apart from the fact that it's not completely understood by regulators, could jeopardize, at least in the United States, our standing vis-a-vis the global community economically. So there's so many issues there, and more technical issues if you want to go back to the the investment acts early on, and the fact that the regulatory parameters and the structure that we're using for these digital assets in 2020 are based on the frameworks that were set out in 1940 and 1946 after the Great Depression. So it's a big predicament. So on the one hand, you don't want to hurt investors that you're trying to protect, and on the other hand, you want to preserve this environment that's conducive to innovation that will advance the country on the technological scale. So, but other than that, it's just a big area of discussion that we can perhaps take up on a future webinar.
Sure. And I think, Nico, you raised a good point about the stable coins. Like it's a very big domain, and of course we can dig deeper in a separate discussion. But I would like to mention that stable coins are revolutionizing the payment system in such a big way, because every country has its own currency. And if you look at these blockchain-based stable coins, um, who would have imagined that today you can send like millions of dollars in actual USD to any country with just a fee of 10 cents? Even today, most of the people, when they are sending money, you have, if you include the currency conversion fee and local fee and so on, everything, sometimes you end up paying 5 to 10% of, it's always in percentage term. And if you're sending millions of dollars, this is a huge problem for people, like business people. And I have personally observed this. And once you go to using stable coins, so what the stable coin, as thanks Nico for confirming, like, to explaining in the chat, these are basically representation of US dollar on blockchain. And nowadays, every country has issued stable coins, or let me not say countries, but the companies who are working with in a regulated environment, where they go register as onboarding agent for US dollar, British pound, euro, Canadian dollar. All of these are on blockchain, where when you send them to one another, you are in control of that, just like cash. But on the other hand, these are like same fee. It's a one transaction on blockchain which costs, let's say, 10 cents or 20 cents. You always pay that. And you're not going to be charged huge premiums. And there is no middleman. I think the biggest thing which you need to understand is this is about peer-to-peer economy. That's what blockchain enables. Whether there are regulatory concerns, yes, because no government likes, and it's for good reasons, because we agree that it's a pretty huge issue. Like if criminals are using this money to fund terrorism, to fund illegal activity, money laundering, all those things are real issues. So when you hear this news, it is not about that these technologies have a problem with regulation. What they're struggling with is, how do you stop crime? Because just like technology is good for average person, it's great for criminals, because they love this new technology and they are the first one to adopt. So unfortunately, the news always starts with criminal activity using new technology, because those guys they need it more than us. Because we go with regulations, we can go and use banks. Those guys cannot use banks, so they are adopting this Bitcoin and digital currencies earlier, and that unfortunately creates a problem. And this is exactly what happened with emails. By the way, I would like to give an example. This encrypted emails, which is a great tool. Everybody believes in privacy. We want encrypted WhatsApp messages. We want encrypted Gmail, and all governments are saying, oh no, we need access to that. And because they're not trying to actually, you can have conspiracy theories that government wants to hear what you're saying, but the reality is, to prevent crime, they need access to those things, and that is their genuine problem regulators have. How do you catch criminals, and how do you keep law and order? And that's where the problem is with regulation, and that will evolve. Just like, and that was there with every technology, as I said, even with Gmail, even with these messengers, like internet messengers, all of them have regulatory issues because of the similar concerns. Even iPhone, means everybody has heard about that case about FBI asking iPhone to unlock a phone of a terrorist, and they're saying, you know what, means we cannot do it, means that's our we are, because of the privacy policy. So technology and regulations always have some sort of hiccups at every stage, but they evolve over time. Both, either technology learns or regulators learn, and things keep moving. So we are not worried about it, but I would like to everybody to understand that this is a common problem for any new revolution, new technologies which are changing the way we act, because regulations have to catch up to new technologies.
And also, just within Blockstart Ventures, the fund, some of the most interesting aspects for me that sometimes I wish we would record for the benefit of just general understanding is, Rahman is a builder. He's a technologist. So he's presenting all these great ideas, and there's the battle between, my side, how these innovations can be viewed potentially from a regulatory perspective. So there's this push and pull between innovation and regulation. So that's the microcosm of what's happening on a larger scale, between governments and companies and so forth. But we deal with this as part of our regular due diligence when we discuss whether they're projects that we've built and protocols that we've built ourselves, or whether we're evaluating investments into other companies and projects on behalf of the fund. So that's always been probably one of the best part of the fund for me personally.
Yep. So I think, this is very interesting actually. And as you say, we can keep going, and we are always excited to discuss these things. Of course, please feel free to ask more questions. We want to make sure that we are covering any major question which come into your mind right now. But overall, just to, I think, conclude on these topics, there are multiple sides here. We are talking about, we started with the dollar and, store of value. But in terms of opportunities here, we do want to want everybody to understand. We go back to the post-COVID world and the investment opportunities. We're talking about, like, don't worry about asset bubbles. They will keep growing bigger and bigger because of this money policies which people have. So this is where I think we need to, as an investor, we need to diversify into solid technologies, into the trends which are changing the world and which are here to stay. You cannot go wrong in those if you go with the trend with a diversified approach. If you're trying to time the market, none of the instruments have been great. Means you can always find a time zone when people who invested in gold over like decades, they lost money. Similarly, nobody can guarantee you an investment which was a short bet at any moment. But what you cannot ignore is the trends. If you invested in a trend in a diversified way, in a responsible way by doing dollar cost averaging, by bringing the right timing into your, into your like discipline into your investment approach, that usually always has won as an investor. And what you cannot go wrong in this new post-COVID world is we want to go back to this whole thing. It is not like last 12 years. If you think that last 12 years, stock market was great and it is sitting on a bubble, it can keep going. So we are not saying stock market is a bad place, but the bubble can become much bigger because the money printing is at really, really different level. But as an investor, the biggest thing you need to worry about is what is the value of your money. Like when you're keeping money in the bank is the worst thing. And by the way, we did not show one of the questions which we asked many of our investors in our survey. And that was very interesting find. There are a lot of people who are still, because they're not sure where to put their money, they're sitting on cash. Now, with the dollar losing value every day, this is the most irresponsible thing you can do by sitting on cash. And there are a lot of people who are unsure what to do. So I think these are the kind of things we are just trying to highlight. As an investor, you need to understand and watch this macroeconomics um, and define a diversified approach to deploy your money, because dollar is not going to, the inflation can go really crazy. Of course, US is not going to turn into Argentina. It's not going to turn into Venezuela. We are not trying to be alarmist here, but what we are trying to highlight is it's unprecedented times. It's not like that last 12 years, which was already a steep curve. If you compare with previous 50 years, last 12 years were very different. We used to call it a post 2008 era, as we all call it in investment world, where the bubbles were forming, uh, dollar was losing value, but everything else you can make money by investing into stocks, in gold, in a lot of different ways. But in post-COVID era, it's at a very different level. The curve of money printing is at a very, very different level. The dollar will lose value much faster. And to preserve that value of your purchasing power, by the way, one more thing before I go into Bitcoin or something, we did not talk about real estate. Everybody, like I get a lot of questions where people say, why real estate prices are going up when economy is going to go down and people are losing jobs? Because the fact is, these are all store of values: real estate, gold. And there's and when you have more money supply available, all of these things will keep going up. And that's the same reason applies to Bitcoin and so on. So it's a matter of whether you are understanding the macroeconomic picture, and whether as an investor you are picking the right diversified allocation of your assets across store of values. That is very, very important thing to understand when it comes to managing your money. And that is what we wanted to talk about today, while also highlighting what we are doing within Blockstart Ventures to help investors to deploy their money in not only store of values, but also in the technology trend, which has been initiated by Bitcoin, but it's growing every day, and providing unlimited opportunities of participating in almost like early days of Bitcoin into something similar, which does not need associate with money, but sometimes it is associated with enterprise software. Sometimes it associated with decentralized financing, which is more about how you are individual, like taking the control back from big banks and your lending institutions and so on. And I think we will definitely do a webinar soon about decentralized finance, because it's a much, much deeper topic. And we do strongly believe that that's the trend in next 5 years or 10 years, which is not even started. It's still a tip of the iceberg, which people are seeing. And people are still busy looking at Bitcoin chart. What they're not looking at is what is coming after this. What is coming after this is that we talked about stable coins, we talked about US dollar on blockchain, but what we want to talk about more than this is the lending, the peer-to-peer market making on blockchain, stock market and assets on blockchain, where you're talking about fractional real estate on blockchain. There are so many different things which are actually moving, and technology is being built. You will see it in next years, like, because technology takes time to mature. You will see that in 2 years or 3 years in the CNBC when they show you that. Today they are busy looking at Bitcoin because that's it's breaking the charts. It's going up every day, and they are news reporters. They are not source of your research. Usually these people catch up when they tell you it's already happened. And what our goal as Blockstart Ventures is to go build those things and be ahead of the curve and try to catch these trends early. And I think while of course, means as we said at the start of the webinar, this webinar's goal is not to solicit investments, where it's more educational. But of course, we do solicit investments also because we are a venture fund. So you can individually set up a meeting with us and we can walk you through those details of how we approach these investments. On the other hand, we definitely want everybody to understand where this trend is going and what you need to learn and not be late if you want to really catch this wave of Web3.
Thank you very much, Ramon. Also, just a reminder, if you want to find out about future events, happenings, and read more about us as an investment firm, you can find us at blockstartventures.com.
All right, thanks, everyone. I think we are going to close off here, and thank you for participating. It's always fun to interact and answer questions. I think we learn most when we're talking to investors. I think while we are a student of this Web3 technology and we are continuously improving our understanding and helping our investors, we learn a lot more. As we said, we did a survey, and we will keep doing these webinars to learn more from you also on what you guys believe and what you think we should cover. Feel free to send us a message, and I think we would look forward to seeing you in next webinars.
And thank you so much for participating with us today.
Thank you.
Everyone.
Bye.
Bye-bye.